Now, Talk Real Estate with Sharon McNamara, sponsored by Boston Connect Real Estate Services.
Hi, I'm your host, Sharon McNamara, and you are listening to Talk Real Estate Roundtable. Let me share a little bit about my background before we get started. I am the broker-owner of Boston Connect Real Estate, a boutique firm that is home to over 30 real estate sales and marketing agents who service home buyers and home sellers throughout Boston, the South Shore, the South Coast, and Cape Cod. Our firm takes pride in assisting our clients in the next chapter of their lives by taking a holistic approach to their real estate endeavors. We believe that every move should be a moving experience. Every week, my co-host Melissa Wallace and I will provide you with my team's unique marketing approach to selling homes and share with you our expertise in navigating the home buying process. We value the experience of our agents at Boston Connect Real Estate so much that not only will you hear my perspective on real estate topics, occasionally you will hear the expert thoughts and opinions of our experienced agents at Boston Connect Real Estate. Be a part of our roundtable. If you have any questions during the show, please call 781-837-4900. We love to talk real estate. Follow us on Facebook, Instagram, and wherever you like to listen to podcasts at Talk Real Estate Roundtable. If you would like a one-on-one consultation with me and my team to discuss your real estate needs, you can connect with me at bostonconnect.com or 781-826-8000. Now, sit back, relax, take good notes, and let's talk real estate. And good morning to all my South Shore neighbors. This is Sharon McNamara. You are, of course, listening to Talk Real Estate Roundtable. You have a special today. We have 2 hours straight because I am with the one and only Alyssa McNamara Reed. So, yeah, can you do a little introduction of yourself, too, while I get us live on everything else?
Yes.
I'm used to having my sidekick, Melissa, here. She isn't with me, and we have Tim in studio, right, Tim?
Yes, good morning.
Good morning.
A family show today. I love it.
Family show.
Yes.
2 hours of us. Hold on.
Oh, 2 hours sounds so long. I'm used to doing only 1 hour these days. This is like back to old times here.
But this is just like the old days, Alyssa. You got this.
Just like the old days, yeah. I said to Sharon when I walked in, I was like, oh, man, this show is early. We used to have the 8 to 10 time slot. Now I'm used to 9 to 10. And this is early for me, but... good morning, everyone. I'm Alyssa McNamara Reed. I'm one of the hosts of McNamara on Money here on WATD. We come on right after Sharon's show at 9 o'clock Saturday mornings. I'm a financial advisor with McNamara Financial. We have offices in Marshfield and Chelmsford, Massachusetts. You can check us out at McNamaraFinancial.com. Here with Sharon this morning. I thought we were going to do, I guess, I always think of doing a show this time of year, you know, like a spring real estate market type show. So that's just kind of what I had in my mind. Of course, a couple things. It's probably a little too late for the spring real estate market. You're always like, that kind of starts in February, but also.
Yeah, I can do that. We can do whatever you want.
Oh, no, but then I just kind of wondered, well, hey, maybe this is a very unique real estate market. Maybe just not a whole lot going on, such low inventory and a little bit of a unique and I don't know, not that it's slow. What's the word? Quiet real estate market, just in terms of lack of inventory
still, but everything is actually quite busy.
Yeah.
But there are a lot of different things. I wasn't sure. This is how you and I roll generally anyways. What are we going to talk about? And then, the night before. So we can talk about anything that you want to. And we're going to do this, straight. We have 2 hours, so it doesn't matter. We can talk about anything and everything.
Yeah.
But with the market, just to sort of get into that, it's been a lot of there's no inventory. So when things go on the market, we're still seeing things go quickly.
Yeah.
One of the things sort of that goes with what I wanted to talk about a little bit today, just because I'm sort of in it myself and a lot of my clients are going through it, is where do people, like the older boomer generation, where are they going? Are they aging in place? And I'm telling a lot of people, just do that, age in place, because it doesn't make sense financially. There's just nowhere to go.
Yeah.
So there isn't even a way to do a lateral move. So, and Melissa Wallace just
walked in. I
wondered
if Melissa was going to be here. Do you want me to move my stuff?
Yeah,
oh, okay.
she's going to go set up. But thank you. She just brought me coffee.
Good morning.
Doesn't she?
Look
She looks
so pretty. Yeah.
We're doing a little Mother's Day event today.
I forgot that we're on camera here on your show.
Yeah.
I normally roll into my show with my leggings and my workout gear on
We do
because I'm
too.
never on camera.
We do too sometimes,
And
by
I
the
just
way. So.
happened to get dressed and do my hair this morning, so thank goodness for that.
I'm having a hot flash though right now. Hot. Can you see how hot I am? Yeah, a little
great.
dewy. Yeah. So so we're on because we're on Facebook and YouTube and all of our live streaming. I know I should have asked Melissa to sort of fix things up there, but it's all right. But yeah, the market, it's still low inventory. Things are going quickly, but then there have also been a lot of changes because, especially in new construction, as you know, I do a lot of new construction. So there's all this talk about the tariffs and things like that. So I thought that you might
price of homes increasing and going forward and things like that.
Yeah. Yeah. Just the cost of supplies when we got so much from Canada and everything. I need an update on all that though. I sort of been on the back burner for a couple weeks now. Are they still holding strong?
It's hard to keep track. I was actually just trying to catch up on my financial podcast this morning because I sort of lost track and I had a week off, not this past week, but the week before for the girls' April break. So I lost track a little bit and things have been changing very, very quickly. So I think we are... tariffs have went up and then came back down through successful negotiations and are still high on China, but I think not so much
for Canada.
Yeah, I lost track. Don't quote me on that. Yeah.
All right, yeah.
Like I said, still catching up on all my financial podcasts from the last couple of weeks, but
yeah, I've been listening to podcasts going back and forth, dealing with my father and everybody. I always talk about my personal life here. So yeah, my dad is in the hospital right now and, just been working through some of that, but he's all the way in Everett. So I have a good, first of all, kudos to the people who actually drive into Boston every day.
I know.
I would
commute
literally,
in general, yes.
I would pull my car over on the side. If I had to do that every day and knew it was sort of long term, I'd pull my car over. I would get out and I would set myself on fire.
Stop. That's a terrible thing to say.
I know, but it is a lot. I mean, that traffic is crazy. So, but they should have just left it where people could work from home. I don't even understand.
Yeah,
so,
yeah, I agree.
Yeah.
So one of the things we wanted to talk about today was, your father and the situation you're going through with your family is sort of top of your mind. So, leaving a legacy was one of the topics you suggested that we touch on today from a real estate perspective and also from just a broad general, financial perspective. So can certainly talk about that. But I guess you do a real estate show every week. I don't. So I did want to catch up on, it seems to me like real estate. I mean, we could probably spend a whole hour on talking about, the extraordinary price increase and growth in home equity that people have seen in the last really 5 years. Really, this is kind of a post-COVID thing, and it's hard to imagine an end in sight. Of course, whenever we're on some sort of a track, whether it's real estate or financial markets, it's hard to imagine it changing. But it is hard to imagine that changing because of this lock-in effect we have where mortgage interest rates are really low. We're on this.
I literally wrote down lock-in effect.
What do we do a
show
once a year? But we're always on the same page. We always work well together. But so yeah, I mean, I guess I was in thinking about some of my comments this morning. You probably know, and we've given each other a hard time about this over the years, but I'm like a bit of a real estate skeptic. Like I don't love, I'll never have an investment property. I don't even want a primary property. I just for me, it's like there's a lot of reasons, like the work associated with that and the lack of time that, I personally have right now in my life to deal with it and things like that, and the expense. And I've always been a little bit of a skeptic about, what's the true growth of this piece of real estate, because when people think about, how much is my home appreciated, it's always like, well, this is what I paid for it. This is what it's worth now. Yeah. And people tend to not really factor into that math, all the expense of the home over time. But cannot argue that in the last 5 years have had incredible growth of equity and in real estate and just, prices of real estate, particularly in this area of the world, but probably the country in general. And so yeah, it's good. It has been a good 5 years to be a home owner. Yep. It's a terrible time to be a home buyer. Yes. But a great period of time to be a homeowner. And things are changing throughout the country. And that's one of the things that I really like to watch and sort of navigate through.
every morning I do this podcast type thing, but we talk to each other, and it's agents throughout the country in different areas. And I tend to feel that whatever happens in our sand states, so like Florida, Arizona, like those areas, it tends to come this way. And it's recent. Mark and I, for Easter weekend, we went and visited Mackenzie in Dallas.
Okay.
Wow. It was so interesting. I don't think we'll ever see that market, only because they have so much land there, right? So there's so much new construction. So we were looking at houses because Mackenzie's looking, to purchase a home, and she knows she's going for her PhD. So she knows she's going to be there minimally 6 to 10 years, right? So she's very sort of financially savvy. Like in her head, she's like, why would I throw my money at somebody else's mortgage? I'm better off having my own mortgage. And I'm trying to explain to her, well, it matters when and how you buy, because sometimes it's better to just rent. Yeah. Right. When we were there, we went and looked at a couple open houses, and I was like, wow, it's interesting to me. Like the price of these houses are just so reasonable. Like you can get a 4-bedroom colonial home in the $500.
Oh, wow.
Right. For that's a resale. And so we went and we looked at a couple. Another scary thing for me was it said open house 8 to 7 p.m. And I was like, wow, that's a long open house. Like I can't
8 a.m. to 7 p.m.
Yeah,
Oh, yeah. Oh, duh.
Yeah. I'm like, wow, that's a really long open house.
Yeah.
So we went and we got there. Well, you get there, there's a sign with a QR code, and you scan the code. You take a picture of your license.
Oh, and you let yourself in?
And you let yourself in.
Oh, interesting.
Yeah. So that's maybe a wave of the future that we might see around here. And again, I only saw that in vacant homes. I would never allow that in somebody who had
your personal property inside of that home. Yeah.
But when we got in there, these houses are tired, like really, really tired, and a lot of flips, but not great flips. It's almost like, you can put lipstick on a pig. Some of them, I was like, Mackenzie, the only way I can explain this to you is, they have granite, but it's like not lipstick on a pig. That would be more painting and stuff like that. But if they did the whole kitchen over, I was like, it's almost like they put filler in their lips instead of just the lipstick.
Put a little plumper on.
A little plumper. So, but when I was looking at that, and it was so interesting to me, I was like, what? So finally we bumped into people that were actually hosting the open house. And I said, why are there so many vacant properties here? I just don't understand.
Yeah.
All of these properties, where are all the people going? Because we do know that a lot of people have navigated towards Texas, right? A lot of people left some blue states to go to the red states, right? I mean, even recently, there's been a huge migration to Texas. So they said, because there's so much new construction, that people are leaving this house and they're buying new construction.
Okay.
So then I was like, well, let's go look at a couple new construction, which I love anyways, because that's my wheelhouse too. So we went and looked at them, and I was like, for $535, I can
$35,000 more dollars.
Yes, I can get a brand new home.
Well done.
4 bedrooms. Well done. 4 bedrooms. 2.5 baths, walk-in closets, fully like quartz cabinets, pantries, everything.
Right, so that's a no-brainer.
It's a no-brainer.
Yeah.
So that's why, though, that resale market, I think that Dallas, again, that area, she's in Richardson, a little bit, south or west or wherever of Dallas. So that's going to be a huge problem.
It's falling.
Prices are falling. So I did a little research, and I talked to one of my friends over there, and I asked her what her absorption rate was over there. And they have about 6 months of inventory. That means they are flipping to be a buyer's market there.
Okay.
Versus here, where we probably have 1 month of inventory, so we're still a seller's market.
Yeah. Right.
So I'm hoping that doesn't come back this way.
I don't know. Well, in that example, I don't know that that's possible, because our ability to build new construction is just incredibly limited. Unless you're going up in a city. Where are you going?
Yeah.
In Eastern Massachusetts.
And I was talking to my developers, because I have, I work with Stonebridge Homes, and I market 2 of their developments, one in West Bridgewater, one in Hanson. And we have a call every Wednesday, and I was talking to them about that aspect of it. And not only do we not have the land here, for some reason or another, just the red tape of getting a development done is crazy.
Really?
They have a 6-unit that they want to do 6 houses in Avon. It's taken over 2 years to just go through the process.
Oh, because of
boards.
Oh, okay. Yeah.
So going through town halls and going through all those boards, it's
right.
making it really, really difficult to build in Massachusetts.
Interesting.
Yeah.
Even though there's a little bit of land if you go further west, huh?
Yeah. Well, and maybe some of those towns, I mean, every town has their own bylaws and maybe they do loosen up a little bit. I mean, I've been on plenty of boards and I tend to think that, and you have too. I mean, in Marshfield, you've been on lots of boards. Your dad has. They just let anyone on.
Yeah. Oh, yeah. There's a lot. There's no inventory of volunteers for boards.
I know.
That's really negative.
So like anybody can go on.
Yeah, it's inefficient and they're all, independent. They're not necessarily working together toward the same objective. And I don't know if also around here, I don't know if are conservation efforts more important around here because of lack of free space. Like in Texas, there's just like an abundance of space. What are they really at this point needing to conserve in terms of open space down there? Yeah. Whereas it's very different here. I do think like conservation efforts and protecting some of our green spaces and things like that.
I think that's important.
Certainly could be important. I don't necessarily know if that's the issue that you're talking about in terms of how long it takes to get permits to build. But I think that's just a matter of inefficient local governments and
just trying to make it like I've been saying, I'm on affordable housing in Pembroke, and we were going through this process of doing a friendly 40B. Like, let's put together the parameters of what, to help the builders and the developers to get to that next step. Like, these are the things that you're going to need. These, you know what I mean? Like, to try to make it a little bit easier for them. And we had one person who came to us. We have no authority. We're just, give talking points, I guess. And, he's having a heck of a time because once it gets in front of, the abutters, it's not in my backyard mentality.
I'm so sorry to hear that. Yeah. That's
Marshfield too. Aren't they against the MBTA?
I don't have my
housing?
pulse on that. I think so. I think that's the case. I don't have I haven't honestly paid a whole lot of attention to local government.
Yeah. Good for you that you have so much else going on in your life that you're not tied down by the boring things.
Is it a good thing? Yeah, I guess so. I think I just choose, I guess I just have to be choosy regarding what I have
where you
time,
have
for.
Boundaries.
And and that's right now it's work and my kids, and that's all I have time for. Yeah,
that's awesome. One of the things you said was lock-in effect. Do you want to talk about that a little bit? Because I think that's one of the problems we have as well with people. No one wants to, like, we have this, I call it ketchup in the bottle scenario, because people are locked into this price. So, this rate. What are your thoughts on that? Do you think you're better off just to stay there because you have a good rate, or do you think leave and have the quality of life you want?
Oh, I mean, I think that's it's hard to answer that generically, but I think the lock-in effect is for very good I think it's a phenomenon right now because for very good reason. I mean, it's very expensive for people to move. Well, first of all, it's very, I will say, difficult and expensive for people to move right now. So number one, price of homes have increased. However, if you're like selling one home and buying another and they're comparable, that shouldn't necessarily be a hindrance, right? And so we can kind of take that off the table. However, if you have a mortgage on your home and you're buying a home with a mortgage, then even if you're selling your house for the same price as you're buying your next house for, it's still going to be more expensive to be in that second house because your cost of financing will be substantially higher with today's interest rates. A lot of people have 2.5%, 3.5% mortgages, and the payment on those is much lower than a payment on a mortgage of the exact same amount at 6.5%. So very expensive from that perspective to move. So that has created this what people are calling the lock-in effect, where why would people move? Because financially it's just not making a lot of sense if you're purchasing with debt, which a lot of people, I shouldn't say are, but want to be, right? Obviously very common. I don't know what like long-term statistics are, but it's certainly incredibly common for people to be purchasing a home with debt, more common than not, right? Historically. Yeah. Probably not the case now, but because you'll please comment on this, but from what I'm seeing now, it's very difficult to buy a home also because it's such a competitive environment because of low inventory, that still those cash buyers, I'm sure, are winning out on the majority of the home purchase bids. And so it's very difficult to be a buyer when you need debt right now. And that's like the majority of people.
Yeah.
And so, of course, we've seen this, this is the last several years, right? We've seen this evolution of, it's almost impossible to win out on a real estate bid in this area of the world anyway, when you need a mortgage. And so people have had to get creative with where can I get money to buy a house for cash, and then I finance it after the fact, right? And that's, borrowing from family members, or, closing certain accounts and reimbursing, and, of course, then the risks associated with that and all that stuff. And it's impossible. It seems like it's impossible in this area of the world anyway to sell first, buy second, which is, from a transaction perspective, from my perspective anyway, is the ideal way to purchase.
Yeah.
More comfortable for everyone, makes more financial sense, but very difficult right now. So
did you see a lot of people, and it isn't as crazy as I would say, like, I'm not seeing as much of the cash, like, you know what I mean? Like people lining up in 20 something offers and cash.
Okay.
Did you see?
Good.
Yeah, I know.
Yeah.
But did you see a lot of people who were, thanks, Melissa. I texted Melissa to bring me my laptop.
Oh, okay.
And does that look all right? Like, can you fix us up there, the screen and all that? I don't know. I don't want to make sure it's on there right. But I think a lot of people with, did you see a lot of people who were taking money from their 401k and like trying to, because we saw that at one point where, this dad was taking out money for, like, they were giving us their 401k statement saying, okay, he's cash. My son is cash. We're going to lend him this money.
Not specifically 401ks, just because we don't personally manage a lot of 401ks,
but
retirement assets, investments. I saw a fair amount of that. I mean, certainly there were situations where I advised against it. I mean, if you're literally talking about 401ks or IRAs or comparable accounts, what we call tax deferred retirement accounts, right? Just the taxes associated with taking a significant sum of money in the hundreds of thousands of dollars from a retirement account. The tax burden on that, if you don't get the money back in very quickly, it can be quite substantial. So certainly a lot of situations where, I had to talk people through that and really advise against it. But, I've seen, people that have assets outside of retirement accounts where it's a little bit more tax efficient to come up with cash to purchase a piece of real estate and then kind of pay their portfolio back. Certainly have seen that. I've had also a lot of conversations with people with adult children that are looking to be first-time home buyers, and talking through the difficulty of that, for their adult children, and even people that make good money now, if they're on a, one income, the difficulties of purchasing a home right now on one income and having a sizable enough down payment, especially to avoid PMI, plus where interest rates are. And, mortgages are just very expensive now, and the financing costs associated with that, with interest rates where they are. It's just, so certainly I've had a lot of conversations with people about, what can I do to take money out of my portfolio? Can I afford to do this and help my kid? And had a lot of conversations like that.
Yeah. It's interesting because as you're thinking about that, I'm just thinking about different pockets of money and where they are. And can you, one of the things you're talking about with, you need both people have to be working, but also think about so many people with college debt. Yeah. And there's just so much. And then I don't know why, right when they get out of college and get their first job, they need a car that's over $800 a month. Like we see it all,
Oh, yeah. Yep.
But I'm wondering, do you suggest to people, and again, I've just flipped this back to you because as much as you want to talk about real estate, I want to talk about the finances.
We've got 90 more minutes, so
I know,
we're good. Yeah.
Do you suggest that people have like maybe just a pocket, like I don't want to say under the mattress, but maybe not so tied up that they can't get to easily?
Oh, yeah. In general, you mean assets outside of retirement accounts? I guess it depends on the age and the situation of the person that you're referring to in your example. But And I could spend a whole lot of time actually on this topic, but yes, it often makes sense for people to accumulate assets and have assets outside of their retirement accounts. I mean, obviously cash, like emergency cash, not literally under the mattress, because we can have pretty good CD rates right now. So you could get some yield on your emergency cash right now. That does make a lot of sense. I mean, it depends on the situation and the ability to accumulate money. But if possible, yes, I love for my clients to have what I call like tax diversification in their accounts and their portfolio, because, it opens up more opportunities later to get money more tax efficiently. So I like my clients to have not only retirement accounts that they've funded and they get the tax break and stuff when they fund that earlier in life, and that makes sense from a cash flow perspective. But diversification is great when it comes to where their money is. Roth IRAs, love those. Non-retirement accounts, those are great. It's good to have money in different places, and this is a good example of later in life why that makes sense, because sometimes you find yourself in a situation where you need a big sum of money, or you want a big sum of money. And if you need $100,000 and all you have is money inside of a pre-tax 401k, it depends on your tax bracket, but you probably have to take out $150,000 to get $100. And that hurts. From that tax liability perspective, it just hurts. And so, it's kind of nice to have another account where you can get $100,000 and maybe it only costs you, $10,000 in taxes. Like it's not as impactful from a tax perspective at that time. Of course, you already paid your taxes on that money, so you're going to pay your taxes at some point. But it's kind of nice to just get it over and done with. I
haven't found a way around that yet.
Good luck.
I know.
These are good people that have large tax burden. Congratulations. It's a good problem to have.
Your dad said that a long time ago. I remember one time, I had to pay taxes, and you know what? It's a good thing, so.
One of my clients was complaining about having to write like $180,000 check to the government. And I was like, good for you.
That's what, congratulations.
That's one. And he's like, thank you. Yes. Yeah. You're right. Life perspective right there.
Absolutely. What are any other things that you want to hit upon too? Because I know I sort of took over and went a different way as well.
No, my brain's going in a million different directions. Do you have to do you take a break mid-show?
We don't take a break. Schedule? Yeah, we don't take a break. We can if we want, but I tend not to. But right. I will let our listeners know you are listening to Talk Real Estate Roundtable. I am Sharon McNamara, the broker owner of Boston Connect Real Estate. The other familiar voice you have here is Alyssa McNamara Reed, of course, from McNamara Money and McNamara Financial, of course. So we're here doing 2-hour shows, and we like to do this at least once a year so we can go back to back. Had to get Alyssa out of bed this morning, and she does not miss this 8 a.m. hour. So,
no, not at all. Do I look tired?
No, you look perfect.
You look marvelous.
Marvelous.
Yes,
marvelous.
I'm refreshed actually to hear you say that you're not seeing a lot of cash purchases in real estate. Can we talk about that a little bit?
Yeah.
That warms my heart a little.
Yeah.
For my clients' benefit and anyone who's looking to be a buyer. So that's changing.
It is changing, and as much as I'm saying we have low inventory, we're not really seeing. We are seeing some multiple offers, and it is really dependent on where that price point is, and what, what range people are in. Sometimes we're seeing multiple offers. Sometimes we're just seeing one offer on a house, so. And what I'm seeing from our agents is this anxiety of, oh my God, the house has been on the market for 2 weeks and I don't have any offers, right? So
compared to the last 15 years, that's probably ridiculous, right?
Yeah. I mean, it's crazy. So people, we're just so familiar with, putting it on the market, you having that weekend, having multiple offers and going from there.
Yeah.
And we were seeing a lot of, I called it reckless. I've been saying on the radio for a long time, that market was reckless. I wasn't comfortable in it. Yeah. As much as I am fast paced, I didn't like that pace for people who didn't understand what they were doing.
Sure.
Right.
Yeah.
So we would always try to slow them down. And, in one of the big things is there's going to be a big change going on in our state that actually goes into effect in June and July. I think that they pushed it out to July. Because as you were talking about it, I wrote down new laws, what people were doing to get their offers accepted. I'll do cash. I'll waive my appraisal contingency, like anything that they could do, their mortgage contingency. And one of the big things that they did was they waived their home inspection as well.
So that's not happening anymore?
Well, it's not going to be able to happen anymore.
Thank God.
I hated that.
That was awful.
It was and we never suggested that for anybody. In fact, if somebody said, I heard, because again, in real estate, everybody has an opinion about it. You know what I mean? So
like everything in life.
Oh, yeah. But they're like, oh, my uncle's brother told me that this is what we should do in order to get our offer accepted. Okay.
Oh, I've never heard that in my business. My son told me to buy this stock.
Exactly. Yeah. So, we were hearing a lot of those things. We actually had a form that we made people sign that just basically said, this was your idea, not our idea.
Yeah, that's smart.
There were a lot of agents out there that were recommending that because it was true. It was something. If you didn't have a home inspection, you were probably better chance. Yeah. So there's a new law that's going into effect in Massachusetts, and it is going to prevent that from happening. So now,
that's a good thing,
So now the to have a home inspection will not be part of the offer, but it's almost like lead paint. You have a 10-day opportunity to have that even after. So
and to back out of the deal.
Yes.
In the event you find something you don't like.
Exactly. Yeah, so now it would be, okay, I'm going to have a home inspection, or I'm not going to have a home inspection. So the seller was very privy to who was and who wasn't. That will not be on our offers anymore. So now it will just come to us. I'm going to have Amy Masper come on from Mahoney Law and talk about this. She did a class in our office a few weeks ago. Now the form will not have it on there. The seller will be looking at offers just based on, the financials of it, basically.
Okay.
And then after the fact, if their offer gets accepted, is when we would find out if they're going to have a home inspection. I think they're still trying to iron out, like, how long do they have until after their offer is accepted?
They opt into it, you mean?
Yeah.
Or they have a window of time where they can get it done?
I heard 24 to 48 hours, which seems reasonable. Like, if your offer gets accepted, now it's like, okay, I am going to have that home inspection. I don't expect the seller to wait another 10 days for you to make that decision.
Sure, yeah.
If you're going to or you're not, because that would really slow down the market.
Right.
Really slow down the market.
Are the home inspectors still around? They're still employed? Because
Yes.
they probably haven't been all that busy the last few years.
Yeah, they're probably very happy about this, actually.
Yeah.
And I think one of the other things we'll see, and I know specifically some of our WATD listeners have contacted me on this in the past, and I've met with people who have done pre-home inspections. So we might see more of that. So
meaning before you put in the offer?
Before you go on the market. So as a seller.
Oh, okay. Oh, that's great.
Yeah. Right? There's pros and
conflict
cons.
of interest there, maybe.
Well, pros and cons to it. It matters what type of house you have. I mean, you have a 4-bedroom colonial. You're not expecting anything to come up. But I think about your house. I mean, when we did the home inspection for your house, the seller was probably more surprised than anybody about the termites.
The radon. Oh,
remember
and
the termites?
Oh,
remember?
Yeah. Yep.
I mean,
and the radon. They had no idea.
They had no idea. So this will be a good way for them to find out, but they also have to be very cautious too, because if it's disclosable items, everything has to be disclosed. Not that you would want to hide anything, but now you're going into it like, oh, I found termites. Anyone who finds termites, by the way, is definitely going to take care of it. No one wants that in their house, whether they're selling or not. And then with the radon, but that's easy to mitigate.
Yeah.
So if you're a seller, you can take care of some of those things beforehand.
Yeah. Actually, that's nice. Yeah. Mm-hmm. And then the buyer gets the report, and this is what's been done. And I think that makes sense. It's a very responsible way to proceed with the transaction.
And they do it a lot in a lot of other states. I have one of my friends who's an agent in Pennsylvania, and that's what they do. You know what else they do there? They call it a BFI, and I only remember because of the BFI truck, like trash company. That's how I remember it.
Know what you're talking about. Okay.
It's like I don't even know what it stands for, but it is called a BFI. But buyer financial something, and the buyer has to give with their offer all of their financials. I just can't even believe they do that.
Meaning like their income and their net worth, like
income,
a tax return,
all that type of not maybe the income, not maybe the tax return,
versus
but
just a pre-qualification letter.
Yeah, a pre-approval letter.
In some states, that's required. Is that what you just said?
Yeah,
oh,
Pennsylvania.
Actually. Oh, okay.
Yeah, you have to give that. And I was like, well, what do you do with that information? And she's like, well, I review it with my seller, and I tell my seller, it looks like they have a lot of debt, and like, do you want to take the chance that this will go through? And I go, but you're not a financial advisor. You're a real estate agent. So why
isn't that the responsibility of like the loan officer?
Loan officer. Yeah.
Oh.
Yeah. So I was like, you're taking on more than I would ever want to.
Yeah. Interesting.
Yeah. So she thinks we're crazy because we don't do it.
Breach of like your person, your privacy.
That's what I said. I was like, well, I'll never be buying a house in Pennsylvania.
Yeah.
Mm-hmm.
There are some beautiful areas of Pennsylvania, and it's probably very reasonably priced.
Yeah.
Many areas anyway.
Because you went to school there?
I went to school outside of Philadelphia at Villanova.
Yeah. I toured that
Go
campus.
Cats.
Yeah.
Oh, yeah, that's right. Casey looked at law school there, right?
Nope, she looked at undergrad there.
Oh, okay.
Yeah.
Okay.
And she ended up at Fairfield.
Right.
Yeah.
Oh, I forgot that. And then she went to law school at BU?
BU. Yeah. BC waitlisted her for undergrad. So when they wanted her, no, Casey's 30.
I know.
I heard Casey actually. And this is the good thing too, is I love, I'm going to talk a little bit about you because right now you're my guest and then I'll be your guest, right? For the second hour is.
It's so much easier when I'm your guest. You get to host.
Yeah. But, I know that Casey had told me that she had recently reached out to you because, you are helping people with, some of these financial decisions on where should I be putting these pockets of money, right?
Yeah.
Like sort of like the question I had just asked,
Yeah.
like, am I better off having some money here under the mattress, so to speak?
Yeah.
Preferably in a CD or whatever. What are CDs getting? Oh my God, my ADD
Something like
is everywhere.
probably. Four.
Okay.
A little over 4 right now.
So if you're getting like 3 and
3.5 to 4.
if you're getting 3 in a savings account, pretty safe to keep it there for a bit. Okay.
Yeah. I mean, no redemption fees, stuff like that. More liquid savings
Okay.
account. So it would be reasonable that that's a little bit lower interest rate than a CD, which is you're locked in
Yeah.
for a period of time.
Yeah. So Casey's talking about the whole, getting rid of some of that stuff too.
Yeah.
Yeah. And I won't get too personal, but like then, I have the conversation. Hey, I'm an open book. I don't even care. And I had this open book. I said to Casey, I was like, hey, when you're talking to Alyssa about, because law school, she was paying for law school. We paid for all the other stuff for her while she was doing all that. And I was like, does it make sense for us to help her? To pay off that debt so she doesn't have the high interest rates and then she can pay us back. But that whole paying us back thing.
How's it going?
Yeah, exactly. So, again, to our listeners, you are listening to Talk Real Estate Roundtable. I'm Sharon McNamara along with Alyssa McNamara-Reed. We're doing 2-hour show today, so her show will merge into this one. If you have any questions for us, whether it's about real estate or if it's about the financial wheelhouse, that's Alyssa's role. I love, and I probably shouldn't be like this. Like I lean into you so much with all of that I don't often think about it. Even when conversations are happening about it, I don't even listen.
About what?
Like just finances and like where to invest and to do this. And, everybody like when the sky was falling 3 weeks ago, right? People are like, oh, well, and actually I do want to talk about that because there were some people who were like, do I take my money out now for good reason? And I want to talk to you about that. Mm-hmm. But for me, people are like, well, Sharon, what are your thoughts? Blah, blah, blah. And because I'm on this podcast thing every morning and I was like, I don't look. I don't know what's in there right now.
Yep.
So whatever I lose, I will not know.
Right. Good. Yeah.
I just won't know.
Yeah.
So it won't hurt me at all.
Yeah.
Because
You're smart.
I don't know. And I'm assuming right now you can't make eye contact with me. Did we lose? No.
Oh, no.
No, I'm kidding. I'm kidding. No, I'm kidding. But, that's the thing. I feel long term. I'm not ready to retire yet, so I'm not going to look. So, but what about that huge gain that people had been making?
Yeah, well, there's a lot to talk about here. I mean, but so first of all, you trust me, right? So you're working with someone that you trust with your money, right?
Yes.
You trust me with your money. Thank you for that.
Yeah.
And so, you can call me anytime and talk about that, but you know what I'm going to say, right?
Yeah.
I'm going to say, I'm going to reassure you that, the right thing to do in that situation is nothing. So, I mean, and that's, well, okay, lots of different things. My mind is going in a lot of directions right now.
We're both the same, but people are keeping up with us, I'm sure.
The best, okay, so the best investors don't look very often.
Yep.
And actually it's so interesting to equate this to real estate actually.
Okay.
So in my world, the world of the traditional, markets, you could log in and you can literally see your portfolio, your investment accounts, change in value literally by the minute.
Yeah.
It can go up. Many securities are traded in the middle of a day. Some of them are just traded once a day. And so you can log in and it's different throughout one day. And actually in the last few weeks, we've had days where it's fluctuated. The markets have fluctuated substantially in value in one business day. So the people that are looking often it's not healthy. It can cause unnecessary panic and alarm and discomfort. And first of all, what happens is the people that are logging in frequently, like every day, they're always going to think their net worth is the highest number they ever have seen there.
Yes.
That's my net worth. And then when it fluctuates down a little, they've lost money. They're not remembering the average value over a period of time. And when it fluctuates up, they've gained money. They're always looking at the biggest number they've ever seen, and that's what I'm worth. And so then it's very scary to, have that fluctuate downward, and I lost money and I'm nervous and what's happening and what do I do? So it's not a good emotional state. I mean, some people are like, some people can handle it, but I think very few can handle it well.
Yeah.
So that's one. But number two, people should be like, actually, let me go back. Let's talk about real estate, and sort of the beauty of the valuations of real estate is that they're done very infrequently.
Once a year is when your assessment happens, right?
Okay. And I would like, so you have an asset, you paid for it, and you kind of like roughly know what it's worth, but you're not seeing the value of your home fluctuate every hour.
No.
In a business day.
No.
Because really that would be like, you'd have to have someone making you an offer every hour to really know what your home is worth. How do you know what it's worth? Zillow can tell you, whatever all these websites can tell you. You can estimate based on what your neighbor's house sold or what a realtor came in, but you don't really know what your house is worth until someone actually makes you an offer. And that's the financial markets. There's actually an offer to purchase those securities, and someone will pay that, right? And it goes up and down based on supply and demand. And so, like I said, the beauty of real estate is, it's valued very infrequently, and it doesn't make people uncomfortable that their $1 million house fluctuated down to 990,000 or whatever, or whatever it is, because they're not seeing that. More than, how often are people moving? Every 7 to 10 years? It's going to be longer now. But so that the 7-year valuation, like it's, it's.
And I think that people try to watch it, just like the people who are thinking about selling, you know what I mean? They're trying to catch it while it's on the up. There's one thing I know for sure is you cannot sell high and buy low. Generally.
True, because you're making the transaction at the same time in a market that doesn't move that quickly.
Exactly.
Right.
But we do see a lot of people who are like, I'm taking advantage of this market right now. I'm going to sell right now, and I'm going to rent. And I think that that's fine. If you're going to another city, especially if you're rent, and figure out exactly where you want to be.
Right.
Like for some reason or another, I want to live in Charleston. I've never even been there.
Yeah.
It just sounds nice.
People do love visiting Charleston.
Have you been? Because
Girls' weekends. No, I haven't been, but it's on my list.
Yeah, see, I just feel as if that's not a bad idea. And then if you see things go lower, then that's a good opportunity.
Yeah.
Or, if you're going to another state or something, like I said, in Dallas, you can get this 4-bedroom colonial for $535, brand new. I mean, it's just wild to me.
Yeah.
Couple things so for us, the market is changing. Usually the end of the month is when we see sold units. And that's how I'm basing the value of somebody's house. Like, what is my home worth? It's worth what the other 4-bedroom colonial sold for this week. And if you don't have a sale every single day with a 4-bedroom colonial in your type of neighborhood, like so many conditions have to be exact, right? So we will do this for our clients, and I'll say, I can update you every month, but it isn't going to change much.
Yeah.
Like you're in a range anyways.
Yeah, right.
I'm giving you a 3% on each end, right?
Okay, yeah.
So to get you your range. So if I take your median and I add 3% to each side of it, like you're still going to fall within that range when the house sells.
Yeah.
So
that's so interesting. You said that you can't sell high, buy low in any reasonable period of time in the world of real estate.
No,
you can do that all the time in the world of your investment account. We can, a couple months ago, you could sell U.S. stocks high, buy international stocks low, and vice versa. Like you could do that in a minute. And across different types of investments. Where what are you going to do in real estate? Sell your colonial and buy a condo low, or
but you're not even going to be able to.
You're not even going to do that. Yeah.
You can't even do that.
You're going to buy an office condo, and then low, and then sell that in 10 years. Yeah, I know. That's an interesting point.
A couple of things that you had said too is, one of the things I'm curious about. Let me just see what. When you're talking to your investors, do you ever say to them, okay, you had $1 million and now you see what happened. Now you're at 800,000. I'm just using crazy round numbers, right? But do you ever say, now let's just put this in perspective. The amount of actual cash out of your pocket was $500,000.
Oh yeah, sure.
Yeah, so you do that.
Oh, yeah.
Evaluation. So you've actually made $300,000.
Yeah.
Right?
It's interesting to do. Yes, of course. I mean, the types of reports that I can provide to my clients are, people are, this year has been a good example of people focus on things in way too short of a period of time. Oh, I'm, down. I've lost, 10% or 5%. First of all, when the market was down almost 20%, that doesn't mean you lost 20% of your net worth, because hopefully you're more broadly more broadly diversified than just, owning the S&P. But yes, perspective is incredibly helpful, and I can be instrumental in that regard, or any financial advisor, could be instrumental in that regard. So, hey, Mr. and Mrs. Client, you're down in value this year, but first of all, my experience has been, it's not as bad as you think. The media is very dramatic. You're in a very diversified portfolio. Global stocks have done really well. Bonds are up in value. If you're balanced, it's really not as bad as you think. And people are like, oh, okay, that's not so bad. I'm like, turn the news off.
Yeah.
But
get off of CNN or wherever the heck you are, whatever station you like, Fox, whatever.
But perspective is helpful. So I've been able to say things like, yep, you're down in value 3% this year, but last year you were up 16%. And the year before that was, 18% or something, and those aren't crazy numbers. 2022 was a down year, but right now, 5-year returns are ridiculous. And it's those longer returns that really matter.
Yeah.
And to what you just, said, in my world, we talk about rates of return and percentages and all that stuff, but also showing people the dollars is really impactful. Like you said, there are times when I can say, yep, you're down in value a little bit this year, but guess what? 10 years ago, you only put in this much money, and look how much growth you've had in that period of time. And you've beat inflation, and you've beat money market, and CD rates and all that stuff, certainly over 10 years. And so, that perspective is really helpful. So the way that I can present things to people, I guess that sounds a little like, what am I hiding? But it's not that, but it's just the perspective is very helpful. And you're not getting on the news lately, you're not getting any perspective. You're getting US stocks are down, the tech stocks are down 30%. Well, you know what? They're still up 50% per year over 5 years. It's, perspective is incredibly helpful.
You don't see any of the green lines. You only see the red. They always do it in red.
Yeah, I know. And it's you're only hearing about one small subset of what a properly diversified portfolio is. Yeah. And
I've definitely flipped this right over to you, and I'm so happy that I'm able to do that with you. I hope our listeners can keep up with us. 781-837-4900. If you have any questions for us, whether it's real estate or finances, please give us a call. Tim will pipe you right over to us. We are in my home studio today. What do you think of our studio here?
I love it. I've been here before. I think
we were
downstairs.
A long time
Oh, okay, that's what it was. Okay.
Yeah, we just moved up here recently. Yeah,
fancy.
So one of my other questions for you, though, in regard to all of that is, when the market was dropping, and this was just a couple of weeks ago when this was all happening, right? And the sky is falling, Chicken Little. It was just the sky is falling. Everybody's talking about it. And I thought about it, and I was like, think about way back when, it's so much easier now. People have their cell phones and they get nervous.
Yeah.
They tend to just trade themselves, right?
Yeah.
Rather than, that's why I think everybody should have, and I know that there are differences for you, so you'll have to explain that. For a I call you my financial advisor, right? I'm not going online to do anything myself.
Yeah. I actually disable that for my clients.
Yeah. So
for their own benefit.
Yeah.
But why are you hiring me if you want to do yourself? Yeah.
So I have to call you if I want to do anything, and you can talk me off the ledge.
Yeah.
Right.
Yeah.
And now I think that, do we see these rapid, fluctuations based on that, where people are just in there? They're like, oh, if Buffett is selling, so am I.
Yeah. There's been a lot of research in this regard, and some, publications certainly that, think about, in what, the 70s and the 80s and even into the 90s, like, the volatility in the markets was not as substantial. Volatility is a measure of like the ups and the downs in the market, right? The change in the share price. And more extreme volatility is like higher highs, lower lows, right? Things are moving quicker and more drastically in shorter periods of time. And as technology has improved over time and ability to trade literally, instantaneously, and information instantaneously available to you in the palm of your hands. Market volatility has certainly increased over the last few decades. And a lot of people think it's as a result of that or partially as a result of increased ability. I mean, the market movements are really like a culmination of people's emotions. Yeah. All the research I've ever done in this regard, and I haven't done it super recently, but like something like 50% of the trading that's done on the markets is done by people, humans, and we have emotions. So there's a lot of emotions moving markets. Markets are just, it's supply and demand. Yeah. When people are optimistic and happy and optimistic about the future of the economy and business and earnings abilities, they're going to buy, and that's going to drive prices up. And when people are nervous about this, that, and the other thing, and it's always something different, and they want to sell and get out because they're nervous, that's going to drive prices down. And so it's driven by emotions, number one, but also speculation. Yeah. You'll hear like markets are forward thinking and speculative. It's because people are thinking they know what's going to happen and they're trading as a result. There's certainly a lot of trading done on the markets that are done by computer programs, bots, and things like that, trend following and things like that. But a lot of it is done by people with emotions. Yeah. And not necessarily a good thing.
Yeah. Tim, is that you trying to? Do we have a call?
Yeah, we got a call.
Your phone. I told you that phone sounds just like my phone.
I heard your phone ring earlier in the queue too. I was like, oh, there it is. Yeah. No,
so we do have a caller.
Yes, we have one of our great callers, great listeners, Jay from Plymouth, but he's rolling around the South Shore today.
Hey, Jay.
It's a great day out there.
Well, good morning, everyone. I thought maybe Tim fell asleep or something like that. So.
I think I just couldn't shut up.
Yeah, exactly. Alyssa was on a roll, and I hate to interrupt her rolls.
I know she gets so like energized by this. It's like my favorite part of her. Yeah, passion for sure. What's going on, Jay?
Okay, I don't want to point to any more fingers, but hey, when I originally started listening to you guys, when I got in the car, I was so the home inspections. I want to touch on that. Could you somewhat explain, go in a little detail about home inspections and what they do, who they're reported to, who pays for them?
Yeah, absolutely. So the way that it is right now or the way that it's going to be?
Both.
Okay. So the way that it is right now is if you are a buyer, you put in your offer, and part of your offer, you'll have contingencies. So the contingencies would be like, I have to get a mortgage. So how much is that mortgage contingency? There'll be appraisal contingencies in there, lead paint, all those things that you can do. And home inspection is one of those contingencies that you can have as a buyer. In the state of Massachusetts, by the way, every buyer should have received from their agent the Facts for Consumers, which talks about home inspections, which is crazy to me that we're getting to this level because, and here's the other thing with our state, it's a document that they created that we have to give, but there's no signature line on it. So we had our own signature line on it because we have to legally give it. So it is your right to have a home inspection. So if you as the buyer do the home inspection, that is your home inspection. You paid for it. It is all yours. So a lot of times buyers will have a home inspection. They'll try to renegotiate with the seller and they'll send over the entire report to the seller. As the listing agent, I won't take it because I don't want to see everything. I don't know who your home inspector is, but there are things on there that he said were wrong that are now disclosable. But you know what, Jay? We hear our music, but if you want to hold on, we can, go into Alyssa's show because we're here for 2 hours today. So I'll leave that up to you. But
I think they do the news for 6 minutes, though, just FYI.
Yeah, so you... Okay. So that is my music here. So Alyssa, thank you. Alyssa McNamara again.
You're welcome. Stay tuned.
Yeah, stay tuned. We're on for another hour. Thank you, Tim. And we're not going anywhere.
Don't touch that dial.
Would you be mine? Could you be mine? It's a neighborly day in this beauty wood, a neighborly day for a beauty. Would you be mine? Could you be mine? I have always wanted to have a neighbor just like you. I've always wanted to live in a neighborhood